What is going on, guys? It's Thomas here. Now, money management is, in my opinion, the most important aspect for any successful trading system. Money management involves cutting your losses short and letting your profits run. It's a pretty simple concept, however, it can be the make and break between a successful and an unsuccessful trader. Reason being is that unsuccessful traders have the habit of not being able to take their losses and cutting their profits short. I myself have been a victim of this, where price has got to my stop and I've moved my stop further and further away thinking that price would change, and price just continued moving forward, creating a larger loss. And on the other side, one of my bad habits when it came to trading in the earlier stages was not being able to let my profits ride and seeing profits on the table and taking them early before they were able to go on and continue to hit their what would have been targets. Now, there's multiple different strategies and ways to successfully create a great money management system. We'll be covering two today. They're both covered in a lot of depth in a book called The Trading Game by Ryan Jones, so I highly recommend you go and have a read through that one. But in today's video, what we'll be doing is looking over one of the strategies in my system. I currently trade it with one of the types of money management styles, and I'm going to go back through my back testing and my existing trades and test it using a different money management style and just see which style suits the strategy better and which one is more profitable. So the two strategies I'll be comparing today are called fixed fractional and fixed ratio money management. Now, fixed fractional is a pretty simple concept. All it means is that you'll be taking a fixed position percentage amount for each individual trade. So let's say you have a $10,000 account and you decide that for every trade you'll be only taking 2% risk for each trade. This is what's defined as an R. So you might have heard it from other traders and educators before, the value of an R. And an R is basically your risk percentage or your maximum loss per individual trade. So if you make a 2R trade, trading 2% as an R, you've made 4% on that particular trade. And one of the main benefits for trading the fixed fractional system is that you can't possibly go broke. It's impossible to ever go broke. You take 2% on every trade, and if you were to go into a drawdown and you continue to take losses, you'll be just continuing to take 2% of that account balance. Now, obviously the account balance will decrease continually, but you can't ever trade your account to zero. And the other benefit of trading the fixed fractional system is that you can maximize your winning streak. So let's say you trade a $10,000 account, taking a 1R for 2%. You make that 1R, so your account's now $10,200. So your risk for the next trade would be $204 rather than $200. And if you take another 1R win, your profit's now $204 rather than $200. So as your account increases, the value of that R or that 2% will increase, and therefore you'll be able to extend and maximize your profits. One of the main cons for trading a fixed fractional money management system is that each trade is valued the same. So what I mean by this is, let's say you have two different strategies, one which has a really nice tight stop loss, which has a 20 pip stop loss for say on average, and another strategy you trade which has got a bit more room for movement if price wasn't to go your way, and it has say a 100 pip stop loss. Even though trade idea and strategy number 2 has 5 times the amount of risk in pips as strategy number 1, the potential loss or maximum loss for both those trades is exactly the same. So it's just something to consider if you're trading multiple strategies within your system. The other thing is that calculations are required on each trade. So let's say you're trading a 2% risk, the lot value or the amount of lots you place on each trade will need to be different depending on the pair you're trading and the account balance. So I have linked a calculator down in the bio below, so if you are interested in just getting an idea of how it all works, how to calculate your lots for each individual trade using this system, click on the link down below. So the other main money management system is called a fixed ratio system. Now this is where you trade a consistent lot value, so the consistent amount of lots for each trade until you hit what's called a delta. So a delta is a value or a profit trigger that when this number's hit, it allows you to increase your lots taken per trade. So again, we'll use the example of a $10,000 account. We'll use the example of a $1,000 delta. So let's say you increase that account from 10,000 to 11,000 using say 0.2 lots per trade. Once we get to the 11,000 mark, you'll be then able to increase your position size. So increase it double to 0.4 lots say. So now the next time you take a trade, your risk will be double and your reward will also be double. One of the main benefits of trading this system is a consistent position size. So if you're changing position sizes using the fixed fractional system that we talked about before, so let's say for one trade you had to put a 0.2 lot on to make that 2% risk, and another trade, another pair, you had to put 0.3 lots on. Because you're changing between different lot sizes all the time, you can as an amateur trader, can make the mistake of accidentally entering into a trade where you've taken a larger or a smaller position size than what you're meant to. I myself have done this, unfortunately, as well, and copped some pretty harsh losses. So it's really important to make sure that if you are using the first system, you make sure you triple check every single trade, your position size for that trade. Another benefit is maximizing your profits. So again, if you're going on a winning streak and you hit your delta and you're increasing your position sizing, and then you continue that winning streak, your profits are now doubled. Although from a negative side for this particular strategy, a lot of the time what you'll find when trading is that you'll be on a winning streak and you'll be able to hit that delta, and then once you hit the delta, you then start consolidating and go on a bit of a drawdown, and that drawdown is then maximized because of the fact that you've increased your position sizing. So again, it's just something to consider if you're looking to trade this style. Alrighty, so today I want to take you through one of my personal trading strategies that I trade. I trade what's called advanced patterns, and these are Bats, Ciphers, and Gartleys. They're basically consolidation patterns in the market that use Fibonacci extensions and retracements. So I currently trade this system using the fixed ratio money management. However, I want to compare against the fixed fractional money management system and having a designated 2% risk for each trade and see which strategy actually is profitable. So I've been backtesting this strategy for over the last couple of weeks. I had previously backtested and have over 1,000 data entries in there, and because I didn't have a certain data point in my backtesting, I've had to go through all that data again, updated with recent trades, and had to go through every individual trade through the markets to understand what the particular stop loss in pips was for each trade to then therefore get the value I need for the fixed fractional money management. So it's been a bit of a pain in the ass, but that's why you should always grab all the data while you have it and while you're testing. Make sure you grab every bit of data that you may require in the future, but unfortunately I've had to go through all the trades again, get all the data that's required to be able to successfully understand which strategy is better. So I have got through 25 out of 27 pairs, so come on through, we'll check out the last couple of pairs that I've got to get through and see what the results say. Alrighty guys, so all the back testing is complete. I've had to go over 1,000 different trades to add some data in that was required to work out the fixed fractional results for the system. So we'll take you over to the spreadsheet that I have just to give you a bit of a rundown. So this here is my spreadsheet I have for all my trades, over 1,000 different trades I've had to enter in here. The back testing was already done. It was just a matter of adding in a particular column that was needed to make the fixed fractional money management system work. And what I've done is for the results, I've gone through each individual pair and just understood and found the results of trading that with a fixed fractional and a fixed ratio money management system. So I'll have a quick look at that one, which I believe is right here. So this is the breakdown from each individual pair, Aussie CAD through the dollar yen, and the way I've broken it down is for each pair I've put it as a start of a $10,000 account and just seen after the period what it's resulted in. So obviously there's a fair few pairs there which aren't profitable, and I don't trade every pair on this strategy, just for reference. And you can see here, this is the results for the fixed fractional money management, and for this one I risked 2% for each individual trade, and this is the fixed ratio money management. And in this particular system I put my delta as $1,000. So basically once the pair hit 10% profit, it would increase the lot size to double. And the results are pretty interesting actually. I didn't think it would be this different between the two. So for the fixed fractional, 67% return over the period, whereas for the fixed ratio, there's 135% return over the period. So basically double, well, definitely over double of what the fixed fractional money management, and that's because the fixed ratio can have higher amounts of risks. If I take you back across to here, which is the equity curve for the fixed fractional money management, you can see the equity curve's obviously a fair bit more ups and downs. There is a fair bit of obviously consolidation and drawdowns which you hit. I think my maximum drawdown for this one was about 17% over a period, which is something that I obviously wouldn't want to be taking all the time. For instance, here on the curve, it drops from 20,000 down to 15,000. Again, here we have another drawdown, 20,000 down to 16,000, and it looks like at the end of the testing, 22,000 down to 19,000, which is probably the drawdown that I've been in at the moment. But so there's three pretty big drawdowns that have been occurred during the period. So obviously having the delta at a particular level will affect the steepness of the drawdowns. But that's why the fixed ratio money management system has been a lot more profitable over that time. But pretty interesting find. I didn't expect it to be such a big difference. But there you go, guys. That's just a quick summary of the two main money management systems used by Forex traders. If you have any questions, feel free to leave a comment below. I've written a bit more detail on it all and how to work out the lot sizes and the pros and cons of each particular strategy. My link with that will be down in the bio. So thanks for tuning in, guys. If you did enjoy the video, please make sure you smash that like button down below, hit subscribe. Thanks again, and I look forward to seeing you next time.